I think we can start.
All right.
We'll
Good.
start slowly but steadily. So
Mhm. Perfect.
how it look like today? So I will quickly introduce Crypto Monday Zurich, then I will introduce you, Luis, and then we'll have a small fireside chat, and we'll finish by Q&A by the public. We'll open the floor so then they can ask questions. So
Perfect.
good evening, everyone, and welcome to Crypto Monday Zurich. For those of you who don't know us yet, we've been an organization. We've been organizing in-person meetups and webinars in Zurich, bringing together enthusiastic builders, professional, passionate people about blockchain, Web3, and decentralized technology. So if you enjoy today's session, don't hesitate to follow us on LinkedIn and Twitter, and join us for our next physical event in February. We'll love to see you there. So tonight's topic is one we keep hearing about in private conversation with founders: incentive design. When your tokenomics, attract the wrong crowd, you get a spike today and a problem tomorrow. To help us unpack this, we're thrilled to welcome Luis Carbajo. He's the co-founder and CEO of Vottun. Luis is responsible for overseeing all facets of Vottun, including crafting the company's culture, setting its strategic direction, and managing the overall operations. So before founding Vottun, Luis was the global head of user experience at Amazon, becoming the company's first Spanish director and working alongside Jeff Bezos. Following 5 years at Amazon, he joined Vistaprint, as head of marketing, and then served as CEO of Solo Stocks, Spain, leading marketplace of SMEs. So Luis co-founded Vottun in 2018. He's considered a leading expert on blockchain technology with deep knowledge of network security and scalability challenges and extensive technical experience regarding protocol, consensus, algorithm, and associated cryptography. Luis holds a degree in industrial engineering from the University of Valencia and an MBA in business administration from the University of Michigan. I will let the floor to you, Luis. Do you want to add a few words or?
No, yeah, my resume, it's extensive, so that means that I am pretty old, as my white bear can prove. So no, yeah, at the end of the day, I consider myself like a digital dinosaur because I started in this kind of digital business long time ago when Amazon, as I always explain, was just selling books online and nobody was believing that the internet was going to change the way that we were doing business. So I have been working in the digital space since then, and I love it. So when in 2017 I learned about Bitcoin, I thought that that was going to be the next revolution in the digital space. I really fall in love with what Bitcoin and blockchain technology can do for all of us in a lot of things that we still struggle in the digital space with privacy, with a lot of things that we can do much better with this technology. So I decided I wanted to be part of this new revolution, and since then I started working with Vottun on trying to create this new future without knowing all the up and downs that the crypto world has, because that wasn't. I didn't expect that the adoption of this kind of emerging technology was going to have this kind of up and downs based also in speculation, things that I wasn't used to. But I need to say that it also makes a lot of fun to work in this space. It's really thriving and quite a journey to try to improve the things that we do and have fun at the same time and build a business that obviously we try to be as successful as possible.
Yeah, I was going to ask you what made you leave big tech to bet on blockchain, but I think you answered the question a little bit. But can you tell me what did that Amazon experience teach you about building something for user that you applied at Votum?
Well, I think that the main lessons that everybody at Amazon learns back in the day were a couple really drives from Jeff Bezos himself. One is that the this kind of mantra of the customer is always right. He really believe it. So, customer experience and do the best for the customer really was something that really stick on me. So in all our meetings back then, it was always someone that was kind of like, I am going to be the customer because the customer doesn't participate in this meeting. But if I will be the customer, I will say this and this and this. So we never forget for who we were working for. So because at the end of the day, yes, we were trying to make a successful business, but the successful business was successful because of the customers was recommending buying at Amazon, etc. So first of all, the kind of customer obsession was something that really is something that I try to apply since I has been working in this digital space, and I was able to learn that from the source himself, so from Amazon and the culture that Jeff Bezos installed on the company. And the second part is so obviously now people see Amazon as a very successful company. Jeff Bezos is one of the richest men in the world. All these kind of things are really things that now, with some perspective, you say, oh, yes, they are very successful. But back then was not always the case. So for the time that I was at Amazon, everybody was doubting about Amazon. And sometimes we have like a Time magazine, I believe, or Forbes, that they were naming as Amazon.crash instead of Amazon.com. And during the time that I was there, we were losing money. We were growing, we were kind of like doing a lot of things, but we were still not a very successful business. And Jeff Bezos has always this kind of long-term view, saying, okay, what is right? If this is going to be better for this reason, we will be successful. We just need to perseverate. We will just need to obviously educate, but we are going to be successful in the long term. And I think that is important when you are looking at these emerging technologies, because people think that it's going to be adopted just overnight, and it's never the case. So it wasn't the case with internet. It's not the case with blockchain. AI probably is something that is taking that kind of challenge a little bit faster. A lot of people are adopting AI, but probably it's not going to be as fast as we think that it's going to be. So I don't know, these kind of two things are for me important. And the last part is that Jeff was always saying that we were even 5 years into Amazon. He was always saying that it was day one. So, today is day one for this technology, saying that there were so many things to do in the future, right? And it's still true, right? So when you see the digital business or internet, etc., there is still innovation in blockchain. It's not even day one; it's day zero. There are so many things that we are still building and making better. So I think that we need to have this kind of humble approach of there is a lot of things to do still in front of us.
Yeah, thank you. Yeah, it's nice to see. So basically, it's not an easy road.
Well, never it is.
Yeah, but yeah, you have a lot of people who think it's like oh, should I have invested in Bitcoin at the beginning? I will be a billionaire, but it's not that easy. So
Well,
the
people will sell with for when they were doing 10x and they will be still poor, right?
yeah,
Very
that's
few people hold for 1000x.
very, very hard. But yeah, so the title of tonight's session is provocative. So we have align incentives before your community dumps you. Can you? My first question would: can you paint a picture of what failed TG looks like from the inside?
Well, that's a pretty good and tough question. And I think that this has been evolving over time in crypto. I think that this last year, well, it has been obviously cycles, right? And it's true that it really depends. Successful TG, it needs to be aligned with several things that you normally can control completely, right? One obviously is have a great community, have good investors, but timing and narrative is something that is out of your control. So if you are launching your token with the narrative is correct, probably you are going to have some hype, regardless what your token is. Timing and narrative is something that is difficult to control and to try to time correctly when you are launching your token. The second part is that the altcoin season this last year has been also really weird, right? All the interest from investors and the activity has been really concentrated in the most of it in Bitcoin and Ethereum. And if you want to go a little bit lower, probably in the top 20 altcoins that operates Solana, XRP, and the rest, right? But not so much going on for new projects, etc. So has been a tough kind of like launch of new tokens. And I guess that is also coming back to the reality that people start being more knowledgeable about what kind of tokens will acquire value over time, and that a lot of people will realize that, well, it's not so easy. And some people decide that as they were not investing, that they were mostly gambling with their money, buying tokens, they decide that as they were doing some gambling, they prefer to do it real gambling with meme coins. So a lot of money went just directly to meme coins. It's if you hit it, it's great, and if you don't hit it, it's what is expected. So you don't look dumb. But versus investing in new tokens that you are supposed to do some kind of analysis, understanding what is the protocol, etc. And if the token goes wrong, you look stupid because you didn't analyze correctly the token. So I don't know. I think that has been a difficult year for new tokens to be launched. And when that's happened, well, what you really, for at least in our case, right, what we still think is that we are not launching the token for the short term. Obviously, everyone is super happy if the token do time 10x, 100x, or whatever at the beginning. But we are really doing this because we believe that this is strategic, that we will be at quite value over time, and that this need to happen when users use the token, or that people use the token, not just because of speculative value. So we try to be calm and think that we are building value over time, and that will be the market will recognize that as we get more users.
Yeah. One question I also had actually is, what do you do actually once you attract the wrong crowd? When you build a successful project, everything is going great, and then basically you have the wrong crowd and sustaining you. What do you do then?
Yeah, well, so the history of Vottun is a little bit of the history of a company that obviously we are passionate about what we are doing, but we also realize that we need to adapt a little bit as we move along. So initially because also I have very good contacts with the corporate world, we start doing blockchain solutions for big corporates back in 2018, 2019, in which they were really interested in exploring blockchain technology for different applications. It was after COVID that we realized that the corporates were not ready for blockchain adoption, mainly for compliance, because when we were going to put these blockchain projects in productions, they were always like the compliance department that was saying, "Oh, but by the way, this is still not legal. We don't know if it's possible to do that, depending on the geography." So, the people in business was happy with what we were proposing. The people in the compliance office, they were not happy. And in all big corporations, lawyers win. So we were not able to put this kind of projects in production. In 2021, we have the NFT craziness, and so we did a lot of things related with NFTs, a lot of NFTs projects for big corporations also that they were really interested on adopting NFTs. But once again, just because of the massive kind of fraud and all the speculation that was around NFTs, kind of the bubble of NFTs burst. And we see that the corporates were losing very fast interest in blockchain technology. So it was at that time when what we realized that the innovation was happening more on the crypto area, and we decided to move directly to focus on more on the crypto industry and not incorporates that will acquire or they will adopt blockchain or crypto technology. And since then, we have been working on different products. So the initial one was really putting all the experience that we have to use to work with corporates, building blockchain solutions, creating a platform for developers that they can learn and use how to build different solutions with blockchain. And as we realized that we need to go a little bit deeper in kind of like attracting people to start using this technology, we are last year we developed what we call like kind of discovery layer that is really a platform for project discovery, for learning, for getting your skills up and get more knowledgeable about everything related with blockchain. And this platform, we call it BQuest. And with BQuest, basically people are able to get rewards at the same time as they are learning about new projects, new protocols, new skills. And yeah, now we are focusing more on getting more people used to work with different blockchain projects and products, our products and other products from other projects, and trying to increase the number of users for this kind of technology.
Very much. Yeah. So I looked at you have revolutionized. You have few nice model actually that you have this build to earn or code to earn, I think, rather than just a stake and earn model. Can you walk us through the thinking a little bit more? What tie your token rewards to actually building and
Yeah. So when we launched the token, we were really focusing on builders, right? And for that reason, I'm saying that we are adapting a little bit. So builders are able to use our platform to really start preparing or building their products pretty easy because we provide SDKs, APIs, everything that basically the tech stack that they need to start building solutions. We even have like a co-pilot specialized for blockchain development that they can use to build faster or to start preparing these things faster. And if they do and they publish or launch products with us, they are able to get rewards based on the usage of these products and the usage and the transactions that these products generate. So this is the kind of build to earn model. As I mentioned before, what we realized is that we also need to go a little bit to kind of like enlarge our reach and not go only about to talk with builders, but to talk also with users that they are interested in crypto, maybe because they buy some meme coin or maybe because some friend told them about blockchain technology or crypto, and that we need to make them for them also knowledgeable about what they can do with this technology. And this is where we built BQuest, and now we are providing kind of rewards to them for learning about new projects, that this part of the learning is going to bring more transactions to these projects. And based on these transactions, we make this business economic model run so we can create a good tokenomics around this discovery that we are building for users and builders.
That leads to my next question because you could argue actually that any reward system could be gamed actually in a sense. So how do you design filters that make farming unprofitable or that keep genuine contribution engaged?
Well, it's a very good question because if something, any project that is launching a new token, I will recommend is that they think a lot about these farming or farmers users because you can find, so I guess that is a good way for people to get engaged in a project because they think that they are going to make something out of it and is completely legit. A lot of projects has grown thanks to that kind of a strategy. But it's true that as this became more popular, you realize that they were literally professional farmers, that they don't give a shit about your project, and that they are farming like 20 projects at the same time, that they don't even know what they do, any of them, right? And I think that, and also it's kind of funny that these kind of professional farmers are kind of the more noisy and nasty and and not very easy to work with when you after launch a token, etc. So you need to be careful to really try to build your community about farmers, that they are doing their task because they like, or they are going to use your product, not just because they are just farming your points and that's it, that they don't give a shit about what you are doing. It's not easy. What I say is it's not easy, but um, if I will recommend someone, they will need to think about incentives very well to really provide these incentives to the people that are kind of like filter, to be sure that they are not just farming 20 projects at the same time. Because and it's not so difficult at the end of the day. What we realize also is that farmers normally are really professional farmers are most of them very lazy, and if you request from them a small effort that is outside like the minimum effort, they are going to just leave, and then they will not do anything in your project again. So, but you need to think about that, because it is what it is. And it's true that in this industry, we kind of stimulate this kind of behavior, and now projects, we complain about this behavior that we create somehow. But we need to adapt based on the lessons learned from our mistakes.
Yeah. It also it's really nice actually having those conversations, because it brings me to my next question quite easily also. So speculation brings liquidity, but too much kills community. Um, how do you think about keeping speculation as a side effect? Is there a healthy ratio, or do you try just to put the incentive? So for instance, in the case of farmer, you put some tasks to do. So basically you reduce really the speculation, or is there a good ratio or not at all?
It's difficult, and quite honestly, our experience, we used, I don't know if you're familiar with one. It's at least it's one of the models that we thought that it was better to really kind of modeling supply, demand, and how the token was going to react to different actions. We were using a tool, it's called Machinations, where that you can basically build all your model and see how that works. And we spent a ton of time trying to model and anticipate the reaction from the market. Uh, all this time, it was useful, but it was not really very worthy. So it gives us an idea on what to do and how to do it. But quite honestly, at the end of the day, the market react in a very different way sometimes, and you don't have a clue why they are dumping you or why they are buying your token. So the liquidity is like a really tough question. We didn't figure out how to adapt our liquidity quite well, quite honestly. So we are still learning on what really makes and what makes more sense to how to manage that. I think our approach right now is trying to really to incentivize that our users provide also the liquidity or part of the liquidity to the protocol in kind of like dual staking models, in which you are putting tokens from, in this case, Vottun and, for example, Ethereum. So you are kind of mixing the rewards in these two tokens. And with the tokens that you are putting in Ethereum, we are able to provide additional revenue or additional liquidity, just because we are able to do some lending and so on, and use that on DeFi. But it's still kind of like tough. It's not like that you have like a magic ratio and you can apply and that's it, and you kind of manage that and that's it. It's not so easy. Unfortunately, it's not so easy.
I imagine it's not that easy. I think we discussed also about this. We need to build this culture first about so that the community exists in the next year or 2 years. But what does it look like in practice? Actually, how do you build the culture before you have a liquid token that
Uh,
everyone's watching?
yeah, it's
Like a chicken
once
and egg
again,
problem.
I think that I could write a book. I don't know if I will be able to write a book about what to do. Probably I will write a book about what not to do. You know, because it becomes very clear some mistakes that we made at the beginning, uh, and uh, and other things that yes, you think that you need to know to do, etc. Probably they are not so important at the end. But just there is a lot of pressure when you are building a product and you announce your TGE and you want to obviously reward the community that is supporting you to build that community as large as you can and as excited as you can about these kind of milestones that you are trying to put in front of for the future for your project. But what is true is that as we are in this really speculative market, you get a lot of pressure that it becomes just from the market. So from the centralized exchanges, from the investors, if you don't have specific numbers in terms of number of followers, number of people that are interacting in your Telegram or in your Discord channels, they are not going to be interested in your project, right? So you have a huge incentive of kind of like trying to build your quantity of followers, but not looking at the quality of followers that you are having from your project, and that is just a huge mistake. And it's a huge mistake from the industry that is basically following kind of like the centralized exchange practices in which, they want to do a successful launch, provide a bunch of liquidity, dump your token, make some money in the short term, and they don't really give a shit about your project. And the industry has been following that kind of practice for a long time. So if I will be doing these things again, I will be less, or I will think twice about increasing the number of followers just for the heck of increasing the number of followers. I think that a successful launch is better if you do it with a community that is really engaged, that not with a big community that is just trying to get some pump and dump of your token the first week. And definitely, I will really think about how I will launch my token, and I will not go from the centralized exchanges that, their kind of like interests are really never aligned with your project interest. So the centralized exchange, I think that is more transparent, much better, that you can see if the community is engaged, how many people are speculating, how many people are vesting their tokens and selling right away. And in centralized exchanges, all that data is kind of like in a black box. And without saying that it's true, most centralized exchanges probably are going to have like not very good practices when they are dealing with your token.
Yeah,
Saying they are going to tell you, hey, you need to add more liquidity. And as soon as you add more liquidity, basically that liquidity disappear, and you are not able to make money. The only ones that they are making money are them because they play with like, with the cards, market cards. I don't know how to say it, but they are basically playing with all this insider information data that it's very difficult to compensate for that.
yeah, I heard that there are various rumor on major exchange that they're doing that, and founders now, I think, like you or others are using sex more using DEX, sorry, more and more. Um, so just for founder in the audience planning now a TGE, what should they be doing 6 months or a year before the launch to ensure they attract the right people? What will be your
I
advice?
think that so definitely you need to have like a long-term vision of what your project is or it could be, and play on that long-term vision to attract the right folks to your community. with the expectations that it's not going to be a easy, quick pump and dump, that is not, you are not going to be rich overnight. You know that basically what are the milestones, especially the technical milestones or the user expectations to basically let them know that it's not going to be very, very quick, right? That for sure, it's like the important day-to-day work for the next 6 months to 1 year. It's true that the final part of the TGE, obviously, as we are going into a market and you need to create hype and expectation, I will concentrate my marketing budget, if you have one, on those just 3 last weeks before the TGE to try to get people supported by your community that is like the strong one, but to have this kind of like users that they don't really understand much, but they are buying tokens and they are kind of like buying hype tokens. And I will concentrate my marketing effort on these 3 weeks because that could attract these kind of speculators that are also good for the hype on the last minute. But don't forgetting what is kind of your main strategy. It's like you are building for the long term. You have a good community that is going to hold your token after the TGE. And yeah, obviously you want to have a lot of people excited, but that is going to be just in the last minute. Because if you spend time and marketing budget 3 months before the TGE for these kind of folks, the kind of folks that they are just buying the hype, they are going to forget. So it really need to be really concentrated in the last minute call.
So we discussed what's happening before, and now the question is what's happening after. So because I realized that after the TGE, so for instance, the next 2 3 months are very brutal for many projects. They're
Yep.
very going down very significantly.
Yes.
And my question will be that what rituals, communication, or product milestones do you recommend to keep the true believers engaged when the price inevitably drops?
I think that this is changing a little bit. So I think that there are two ways of preventing, not preventing that because it's going to happen because it's kind of like the nature of kind of the launch lately, but at least control it a little bit more. The first one is market making. So I would really recommend to the projects that they really need to understand what market making is going to do for them. Most of the projects or the tokens that are launched use external market makers, and market makers, similar to the centralized exchange, they have their own agenda. So you really need to understand what they can do for you and what they cannot do for you and what they are going to do in their own interest, even if it's going to hurt you. So this kind of understanding of market making is really, really important. If you can do it yourself or have a kind of like balance back and do kind of like the market making yourself, is going to help you a lot because you will be able to understand who is buying, who is selling, and these kind of things are really helpful to really try to at least understand what's going on and understand if it's just some speculators that are buying your token or that you have a real problem because people in your community are dumping your token. So that will be more on the kind of like technical side of controlling what's going on in the market. And the second one is not so much related with market making, but is really related to who is controlling your narrative. So, a mistake that it's made by a lot of projects is that they have been taking like advisors or influencers that speak highly about their tokens, but the contract or the agreement that they have with these influencers or with these advisors is not long enough. So the incentive for these influencers is really to speak highly about the token, but after the first month, they sell all their positions and they don't mention your token anymore. that is and it's part of with what a lot of influencers in this industry does or do, right? So you just need to be careful with what kind of influencers, what are the incentives. They buy your token, or you just give them their tokens as reward or as a price for speaking about your project, etc. And understanding that maybe they are going to dump your token even they are saying that it's great, and that is also hurting you a lot when a lot of people that are following these people, they realize that these guys are also selling.
Yeah, but I mean, this is not only in crypto, it's always in the bank. It's been everywhere where
Yeah.
people are like, yeah, guys, don't worry, we're with you. And as soon as the market opened, boom, they don't they sell. It's been uh proven model. But let's go to some practical advice for founders.
Yeah.
So if a founder come to you with their token economics draft, what, for instance, for you are the top three red flags you think that this will attract the wrong people, or you might get burned by doing that?
I think that you need to be looking at the vesting schedule that the investors has. So if you have investors that they are basically saying that they will not have a longer period of 6 months of vesting, that is for me a red flag. If you are an investor, and investor meaning someone that is sophisticated enough to buy a big amount of your tokens. I am not considering an investor someone that invests $100, $1,000, but people that are putting tickets of 50,000, 100,000, half a million, depending obviously of the size of what you are raising on that point. But if someone came to you and basically the terms is saying that they invest, but their vesting time for their tokens is 3 months or 6 months, for me is a red flag, because that means that they are sophisticated enough for having a considerable amount of money to invest in your token, but they don't believe enough to really hold your tokens for more than 6 months. Not any product could be really, really successful like in 3 months or in 6 months. You need to have like a more kind of long-term view or patience to see if that is going to be really great. You are going to make much, much more money in 2 years, or 3 years, in 5 years. And for me, that will be a really red flag. And crypto is what it is. So a lot of investors try to obviously, if you don't have that kind of expertise, especially with young founders, they are going to say they are going to mark their terms as they have the possibility to get all their tokens in 3 months or in 6 months, and that can really hurt you. Uh, so vesting from investors is something that is really important.
Okay. Do you have any other red flags?
Other red flags. Um, I will also recommend to do tough due diligence in all kind of advisors that they came to you when you are building your TGE, saying that they are going to help you with a ton of things, because most of them, in our experience, has been not really worthy. So you need to be really careful with these advisors and prepare in a very professional way what are the contracts that you sign with them in terms of deliverables. So, I can be the best advisor in the world, but if at the end of the day I don't deliver what I am supposed to deliver, what the fuck? But if you don't do it right, they are going to request their tokens, no matter if they don't do shit. So be careful about that part too.
Do you have any other red flag that come to mind?
Oh, there are plenty, but these two. No, and the last part, I think that the marketing, you need to be very wise. So a lot of things in crypto are really overpriced when you came to marketing. So you need to be careful and really try to uh, talk with other founders that has been launching tokens 3 months before you, because probably they have the same kind of issue, and talking with two, three, or four of them, you are going to save a ton of money from things that maybe they are not working, they don't work, or things that are really pricey, because they think that you are going to make millions in TGE.
Yeah. What my question now is, if you say that there are bad actors and that by discussing with the community or your peers of other founders, you find out this, don't go to this guy, he's overpriced or he doesn't deliver. How is it possible that this guy is still in the field? Because the word should spread and know that the guy is a black sheep.
Well, you are not. Well, I know that people are really trashing other people in X or in Twitter or whatever, right? But this is not in your top of the list, getting fights with someone that don't deliver. If someone asks me, I am going to tell them, yes, this guy is full of crap or they don't deliver or whatever. But if not, I am not going to call 10 founders to tell them about the bad actor that I found. So I guess that they are lucky in the sense that they find people that they are able to convince that they are great, and they scam them. So, but once again, I think that if for that reason I say that a good practice is to ask for references and to talk with other founders. For us, was really useful when someone say, I am going to do this for you, and I say, oh, great. With what other projects you have been working with, and they tell you two or three, maybe thinking that you are not going to call them. And when you call them, they say, well, yes, he did that for me, but this and this and this. He was not very clear in what he was going to do about this, about that. So that was really useful for us. And I think that this is I think a good recommendation for anyone that is because at the end of the day, crypto is still kind of like not very transparent in terms of industry. So you still find a lot of surprises that are in the shadows. So it's better if you ask and check for references.
Yeah, that's a very good advice actually. Just to come back quickly to the top red flags, because I have one, for instance, I want to know what you think of that. Is when I see, for instance, a yield on a project, then when you stake and it gives you like 50% yield per that for me is a red flag. Is that for you also a red flag when you have a double digit yield, or is that, can you still believe it's still possible to?
It's I guess that is so you need to also be so the thing is that in crypto projects we are people are so used to make yields that are completely incredible in the real economy that sometimes they are kind of expecting that to make very big yields out of nowhere. So I think that this is very difficult to support in the long term. In the short term, maybe it's possible to have some very good rewards for the early kind of adopters of your protocol. So if this is kind of a yield that is going to be there for 2 years, I will say how you are going to support that, right? But if this just for the small number of early
Yeah,
adopters that help you to really get the first stakers in your protocol, etc., why not? I think
yeah,
that it's kind of like you need to kind of recognize or reward with a higher reward, kind of like the higher risk takers that you are able to find. And in order to do that in crypto, you cannot do it saying, oh, I am going to give you 3% or
yeah.
5% or 12. So yes and no, just to answer your question. It is true that is not sustainable in the long term, but for the beginning, with some kind of like specific strategy to really uh, get things moving, I think that sometimes you can find these kind of opportunities and be completely okay.
Okay. Knowing what you know, what will you have done differently in Votum own token design or launch strategy?
Well, I think that in our view, we thought that we were able to attract more builders than what we have been able to attract, and it's true that we were really targeting a very kind of niche community in terms of there are not so many developers that really understand or that they are not don't understand they are working on blockchain, especially now also that in or over the last year that they were so many attracted to start working with AI or developing things related with AI, etc. So realizing that we need to enlarge our audience as we did over the end of this year, 2025, has been probably something that we have done differently, because we were thinking that focusing on builders was kind of like getting for the most valuable asset that this industry has, people that are building projects. But at the end of the day, our market was really small, and it was even being reduced because this kind of talent was attracted by this emerging technology that's called AI, and we couldn't find as many builders as we would like to. And just realizing that early on, it will be save us some months of the kind of adapting our product to really focusing more on a larger audience that now we are working.
Okay. We're about to close, so I have like two last questions before opening the floor to the audience. We're seeing more regulatory clarity in Europe and in Switzerland. How do you think the TG landscape is evolving or is going to evolve in the next year, 2 years?
Well, I hope that this is well, it's good to have clarity about what you can do and what you cannot do. The main question mark is that if this clarity means that only big actors or big players are going to be able to tokenize the utility tokens that they can issue or the security tokens that they can issue, we are going to get back to a very kind of like really structured markets in which innovation is not going to happen. And that is sad, because at the end of the day, some of the tokens that now are worth billions of dollars were coming from, from a hackathon, because some very talented team was able to build a DeFi protocol that was doing something different. And, maybe that is not going to happen anymore if to just issue a token is such a complex process, because you need to do or to pay so many lawyers and to do so many regulatory hoops that is not going to happen. And these projects are going to happen in places where it's easy to do still launch a token. They will go to Singapore or they will go to other places because they don't have so many issues. So, what I say, I think that to have the regulations is good in general, but we just need to be sure, and that is the part that we can control, right? That if these regulations means that only big banks are going to be able to issue tokens or to sell tokens or whatever, we will get back to a very structured market in which only the big players can play, and that is going to be bad for innovation.
Yeah, no, there are a lot of jokes about that in Europe and the US, comparing that Europe, they're overregulated, killing innovation, and that everyone is moving to the US because of that. But I think
and I agree with that part. At the end of here, we do the rules before even understand what is going to happen, and we have so many examples about that, right? We have GDPR, and yes, people are talking about their privacy laws and whatever, and it's bullshit. So there are so many regulations that at the end they has been kind of like killing some of the best products that were out there. That it's kind of like silly, but it is what it is.
yeah. My last question before opening the floor. So for anyone watching who's building in Web3 and struggling with the problem we discussed today, how are they can connect with you and learn more about your approach or more about Vottun?
Pretty easy. So my name, Luis, at Vottun.com is my email. I am also active in Twitter, LinkedIn, in Telegram. So in any channel, I pretty active. So more than happy to connect through Twitter or through email, wherever they want.
Perfect. Thank you very much, Luis. Is there in the participant, is there someone who wants to ask a question? I think Yannick asked a few questions. Do you want to take the floor, Yannick, and ask your question directly to Luis?
I can do that. Does my microphone work?
Yes, sir.
Yep, perfect.
Hello, everyone. So I'm going to be very open, but I'm not trying to be a cynic. I do feel that time is a flat circle. I've been asking and treating the same questions back in 2017, 2018, when the ICO hype was around. And I feel like the player names changed, but the game is still the same. So we're calling things TGE now and whatnot. I do feel that there is zero change that happened in this industry. I'm quite astonished. I signed up to this event. When I read the title, I thought it is like an old event that popped up in my inbox. And I really wanted to hear if there was anything that changed. Apparently, it's not the case. So, to my question, in the very beginning, you said something about innovation not happening in Europe, and you touched on it again in the end of your conversation. Can you maybe elaborate a little bit on what type of innovation in context of Web3 technology is being developed and adopted in the US and in Asia and in the UAE, with a specific remark of asking about use cases that are not putting money from the left pocket into the right pocket?
When I mention in terms of innovation, means what I mean by that is that in order to build successful business with emerging technologies, you normally need to have resources when you are still not making money. So you should be able to find investment like in AI, they are not making money, but in the US, they are able to raise billions of dollars to build what they are going to be in the future very successful business. In Europe, it's not happening in the same way that is happening in other geographies. When you think on where people are attracted to build different products because they are going to find very easy way to put that in production, Europe is not going to be the place. So we have been, for example, building in 2021 with the Bank of Spain, one of the initial corridors to use crypto for big companies and to use crypto for paying with stable coins, different settlements across countries, right? That was very innovative in 2021. But the Bank of Spain, together with the central bank, they don't allow us to talk about stable coins in all the papers and in all the documentations that we were working with them. Why? Because for them, stable coin is not a stable coin because they are a central bank and they cannot allow to that. As when you see that kind of things, even in a sandbox that was really trying to foster innovation, what happened? That finally you finish the project. The central bank say, "Oh, your product is doing what you think you said that it was going to do. That is to change the SWIFT system, the bank SWIFT system, to send money between countries for another system that is even faster, more reliable, more traceable, better than what you have." Even when you have even big companies participating in this product, the central bank say, "But you are using this kind of like digital assets that these are not money, and as they are not money, we don't have rules to tell you that this is money." So just based on just this kind of like double language that they have, when you get back to that company and say, "Hey, you see what I tell you? This is better to send you money from Europe to the US or to Brazil or to whatever." The compliance department say, "Yeah, it's true, it's working, but the central bank is telling us that it's not money, so we cannot use it." They just kill innovation just because of that. So this is something that in Europe is happening time and time again. Banks in the US, they don't need to request all this kind of compliance to test things. And in Asia, it's happening exactly the same. So here we are very slow, just in general. And that is what I mean for saying that Europe is behind on innovation. Because at the end of the day, if with that kind of product you are in the US, someone is going to invest in your company, giving you money, knowing that probably you are going to take 1-2 years to get all the license, but the product is working and everything should be following through. here in Europe, the answer is different. If I don't have exactly all the information and I know that this is going to be approved in 2 years, I am not putting you money in. So the innovation is killed just because of that. I was referring more to that kind of a scenario that is happening over and over again.
Do you have other questions, Yannick?
Well, many. Well, to be frank, I think there shouldn't be, or I mean, in my days in the industry, a lot of the speculations about how and why the market develops were very focused on that there must be some specificity to the crypto market that sets it apart from the other economies of this world. And I guess this assumption is wrong, and I've always tried to speak against it. And I think in that regard, yes, fundraising is very different in the US than it is in Europe, but it is not a crypto-specific thing. An advocatus diaboli position to this whole topic could be that, especially in the UAE and in Asia, crypto mainly is adopted as means of payment because it is a very handy tool to obfuscate flow of money. That could be, I think it's hard to defend against that. I know all the politics about it, but basically, this is a big part. As for development, adoption, and regulation, I think that we've been going in circles because everybody is so focused on establishing protocol and completely forgets about the use case. As I like to, so I am probably the last generation of non-digital natives, and I saw how protocols spread that made our life easier, such as the TCP/IP protocol for communication over the internet, right? Mm-hmm. I have never in my history found a company that tries to sell me something because it is based on TCP/IP. They sell me something because it makes my life easier, it saves me time, it earns me more money faster or whatever. And still in 2026, people are running around selling something because it is crypto, because it is based on blockchain. My position is that nobody cares, right? And still people are trying.
No, but quite honestly, I disagree with you. I think that a lot of people, so you have two ways of looking at crypto, right? And one is just based on what crypto can do for you. And they are not trying to sell you, you need to invest or you need to do, or to use DeFi or to get some yield from your USDC because it's crypto. It's because, if you are having a digital asset that is buying bonds and they are doing some yield and they have some yield, you are able to benefit from that is now only reserved to the banks. Now you can do it because of the centralized finance. So I will argue that the products that are really, really successful in crypto, you have two types. One is the ones that are really useful because people understand and they are able to make money with them or make money or use them. And the second one is the speculation market. And it's unfortunate that, we still have a lot of people on that part of the crypto world. And what I don't know if it's good or bad, because at the end of the day, it's the only things that has been sustaining a lot of innovation also in that space. So maybe there is some positive on this kind of speculation. But, NFT technology is great for a lot of use cases that they were put together in 2021. What crashed that? The speculation. The use cases and the technology is great for a lot of things. What crashed it? Speculation. Why is very difficult to put that in production in the real companies? Let's put real, like the traditional companies. Compliance. Is because if you are doing something that now it requires to be a financial services because you are Nike and you are just selling digital shoes. But as you are selling digital shoes and digital shoes are appreciating in value, now you have like one kind of financial regulator that are saying that maybe those are stocks or whatever. You know what Nike does? Fuck it. My business is just selling shoes, even if now this could be very interesting for my community, for a lot of things. So I understand because crypto is kind of like a very difficult industry / technology, all things are together, and you also have this kind of gambling mentality that people are making money just because they are speculators in the same way that when they are gambling in a casino or something. So yeah, let's put it that it's fun to watch. It's not easy, but it is what it is.
In my view, Yannick, is also you have that everywhere actually. It's not just in crypto where you have people scamming each other. It's the same also.
Of course.
You have the
Maybe.
.com bubble. You had that everywhere. Crypto is just not different. Human nature is not different. But I think this technology is evolving not as fast as it should. But the use cases are there. You have a few use cases that work, and in my opinion, most of the use cases we're still trying to find the use cases that, and you have a few that works. And for instance, for me at least, Bitcoin succeeded. In it's an alternative measure to the central bank. And you can there is a very good book, The Bitcoin Standard by Seyfeddin Ammous. I don't know if you read this book, but if
I
you
wouldn't put Bitcoin in the same category as what we're discussing right now. So
all right,
consider me a Bitcoin minimalist. So
minimalist.
yeah, well, I made that term up because I'm not a maxi, but still I'm a Bitcoiner. Yeah, no, definitely. But those are, I would jokingly call these use cases money from the left pocket into the right pocket, because you're just changing protocol of money, right? Of course, there are additional uses of Bitcoin that go beyond fiat money, but essentially you're taking money from one world, putting it in the other. What I really, I mean, I agree with you. It's been the same in every industry. I'm amazed at some things. So I've been pretty deep into this crypto world for quite some time, and I left it a little bit because I've been more active in other things right now, in fintech and so on. But I came back to it, trying to catch up, and I'm amazed that things haven't changed. For example, I cannot understand, I cannot wrap my mind around the most obvious use cases that were around back then, such as the tokenization of stocks, equity. You know, of course, there's Actionariat and all these companies, I know of them. STX has sunk I don't know how many millions into a project that they haven't brought to fruition, right? Now Berner Börse is trying the same with BX Digital. It still is not flying. How come that these things are there so many predators in this industry that are trying to scam money and skim money off the top, that things are not going to work out? Or what is it? What does it?
I think that I have two kind of like explanation for that use cases that you just mentioned, right? One is, the main one is compliance. So basically, we are on that specific market, we are fighting with big banks, and they has been protecting the realm, trying to don't let people tokenize stocks. So you cannot buy Apple stocks anywhere, or that you need to go to the proper channels in order to do that. Apparently that is changing, but it has been taking what, 5 years or even more, right? Because that use case is clear. It's very easy to understand. Everybody understand that part. But at the end of the day, until that you have, in this case, regulation, and now that the big players meaning the big banks, they are able to do that, is when that is happening. So it's true that, here we are not fighting. So internet just really fight with newspapers, and they don't even think about, that they were fighting against internet. It was too late when they realized that they were going to be kind of like uh, bankrupt because of internet. But banks are a different animal, and they has been reacting in a very big way to this kind of like innovations, because they understand that they are the big players and we are the small players, and they has been always really successful and powerful, and they can do whatever basically want. Just last week, you have Coinbase that is kind of like retiring from the talks of the new law that was going to pass from the US Congress, just because the banks with the lobbying are able to change something related with the stable coins. They don't want people earn yield from stable coins, and they are able to put that in a law that was to pass like a crypto-friendly law. So, I think that these kind of like big players are doing their thing too. So I don't know. Let's see.
I think the same as you is just they just defend their turf, and you can see that with cigarettes also. I don't know if you can. There is documentaries where people swear to God that it's not toxic, and it was very slow, the development. So that basically it's the same here. I think they're fighting tooth and nails to to protect the industry, and they're using all the tools they have. And at the moment, what the best one is regulation. At the beginning, they were fighting against it, and now that they see it serve their interest, they're like, hey, regulation, look, it's not regulated. You need to go against it. And
the take-home message is banking kills. Should it be written on all cards in the future?
That's why you have Bitcoin. It's really nice to discussing with you, Yannick. I really wish that you can come to the next one. We have in how do you say that? I'm sorry, I'm a little bit sick. Physical sessions actually in Zurich. So I think you're in Switzerland somewhere.
I spoke at one of your sessions in the past. So, yeah.
Yeah, we'd love to have you back actually if you can come, so we can discuss. I would love to share a beer with you and discuss a little bit more. It will be really nice. We'll just ask Sebastian or Tijana if you have any questions. With some mute. So I will take that as a no. And yeah, we're about to close, so we have like 4 more minutes. Do you want to say something, Luis or Yannick, and last questions or last recommendation?
Same as Yannick, I have a few questions, but I will leave it for another day. Otherwise, we're gonna take the whole night here.
No, very glad to be here, guys. I think it was really a cool session. I really enjoy also Yannick questions because I think it will be really fun over some beers to discuss about all these things. That I also agree with him on a lot of stuff, because it's true that it seems that the deja vu over and over some of the things that happen in crypto every year, it seems the same. So, but we need to perseverate. I think that at the end of the day, we will be successful, or at least I hope so. And we will make a better world just because this technology allows us to do a lot of things that, we don't need the banks to do for us, quite honestly.
Yeah, good point. And it's the same for Sebastian or Dijana. If you're in Switzerland or in Zurich at least, and you want to come to a physical event, please come. We'll love to have you. So we have the next one in February, I think. Luis, do you know exactly when it is?
That's right. We're gonna announce it in the upcoming weeks. We're still closing the panel on the venue, but yeah, in about a month, exactly 4 weeks, we'll do it at Tenity, our partner for the venue, and the great accelerator program they have. So yeah, keep posted on LinkedIn, X, and you will hear from us.
Yeah. Anyway, thank you very much, Luis from Vottun. It was nice. Thank you, Yannick and Sebastian, Tijana. It was nice having you. And yeah, let's keep the conversation rolling and trying to see you next month.
Thank you.
Thank you, everyone. Ciao. Have a great night.
Bye, Luis. Thank you very much.
Bye.
Bye.